The Parliament in Cyprus has delayed until Tuesday a decision on whether to allow an EU bailout, which will cost its citizens millions of their hard-earned euros. Every bank customer will have their cash taxed if it goes through. The plan caused panic over the weekend, with people emptying ATM machines, fearing their life savings could be plundered. RT's correspondent Tessa Arsilia reports on the implications.
The EU finance ministers and the International Monetary Fund had agreed upon a €10 billion bailout for the country on the condition that this bank deposit tax be imposed. Now, this could amount to up to 9.9% of those who have more than 100,000 euros in the bank. And for many people there, it's their entire life savings that they have they feel are now in trouble. And the panic that has been stirred over the weekend, people trying to get money out of the cash machines, but electronic transfers have been stopped and the machines had been running out of money, and people there are calling this essentially unfair, unjust, and simply robbery, their savings being taken away from them. The president of the country, however, has been painting this acceptance of the bailout as crucial for the country. He says that if this bank tax, this requirement is not passed, then the country might be forced to get out of the Eurozone area, and therefore some people feel that the country has really been put in a position where it has no choice but to accept everything that is being handed down by Brussels, by EU leaders, by the meetings that they have here. As far as the people are concerned, again, they really see this as an infringement of what is supposed to be theirs. And this is unprecedented in the sense that this is the first time that a requirement for a bailout is actually means dipping into the personal savings of citizens. This is the first time it has happened. Officials here are saying that this is not going to be a precedent, that is not going to be a trend. However, already there is doubt among EU citizens as to whether or not this line, a red line that they thought would never be crossed, has actually already been crossed. And if we look again at what may be the biggest factor in disrupting the very fabric of the European Union, is this kind of social dissatisfaction, this kind of a protest from the people where they are not happy with the kind of decisions that their leaders are making, as it directly impacts the very quality of their lives.
Well, the aftershocks of the EU's proposition have been felt in countries both inside and outside the Eurozone. RT's Tom Barton has the details.
Unfair, unprofessional and dangerous were the words that Vladimir Putin used through his spokesman about this tax on deposits in Cyprus that would be necessary for that €10 billion EU IMF loan. Russian banks, Russian businessmen and exceptionally rich Russian individuals hold disproportionately huge deposits in Cyprus, given the country's size. The exact number of billions is estimated to be above 10, but the exact number could be far higher. It's very hard to establish. It's partly because of that reason that the EU wanted a tax to try and distribute the burden equally and to avoid money laundering. There are reports in the Greek media that the Russian state energy giant Gazprom proposed its own bailout to Cyprus in return for energy exploration rights around the island, but it was turned down because Cyprus wanted a solution from within the EU. All of this does raise questions about the future of Russian deposits in Cyprus, about whether this tax will hurt more investors or the banks that hold their deposits if those deposits are withdrawn. It also raises questions over a €2.5 billion loan given by Russia to Cyprus, which may itself not be extended.